Nigeria Analysis Report, the Naira's Mixed Performance in May 2025. Prepared by your name or organization. Date, June 4th, 2025. Subject, Evaluation of Nigeria's foreign exchange trends and macroeconomic factors driving the Naira's mixed performance in May 2025. 1. Executive Summary. In May 2025, the Nigerian Naira exhibited a mixed performance across different currency markets. While the official exchange rate at the Nigerian Autonomous Foreign Exchange Market, NAFEM, appreciated slightly by 0.7%, the parallel market saw a 1.2% depreciation. This divergence reflects the ongoing instability in Nigeria's forex system and highlights broader macroeconomic and policy-related challenges facing the economy. 2. Official versus parallel market dynamics. NAFEM rate, 1,586.15 Nigerian Nairas per USD, appreciated by 0.7% MOM. Parallel market rate, 1,610 Nigerian Nairas per USD, depreciated by 1.2% MOM. The stronger performance in the official market is largely attributable to increased dollar liquidity interventions by the Central Bank of Nigeria, CBN. However, continued pressure in the parallel market underscores persistent demand-supply imbalances and a lack of convergence between the two markets. 3. CBN policy interventions. The CBN implemented a series of policy measures to stabilize the Naira. Resumption of FX sales to Bureau de Change, BDC, operators at controlled rates. Interest rate hikes to curb inflation and speculative demand. Forex management reforms, though partial, aimed at improving transparency in the NAFEM system. These actions provided some relief in the official market, but their effectiveness in reducing speculative pressures and black market reliance remains limited. 4. Macroeconomic pressures. A. Foreign exchange reserves. Nigeria's FX reserves face strain due to irregular crude oil revenues, impacted by theft, pipeline vandalism, and falling production volumes. Limited non-oil exports, resulting in weak forex diversification. B. Inflationary trends. Headline inflation surpassed 30% YoY, largely driven by imported inflation due to Naira depreciation, fuel subsidy removal effects, increased transportation and food costs. 5. Currency abuse crackdown and public confidence. In a controversial move, the government began enforcing anti-currency abuse laws, targeting the cultural practice of spraying Naira at public events. The EFCC made multiple arrests and issued fines and prison terms. This has sparked public debate on whether cultural enforcement contributes meaningfully to economic reform or is merely cosmetic. Public confidence in the Naira remains weak, with speculative behaviors such as dollar hoarding and underground forex trading persisting. 6. Investor sentiment and capital flow. Foreign direct investment, FDI, remains stagnant due to FX repatriation concerns and regulatory unpredictability. Portfolio investors are cautious, awaiting clarity on exchange rate unification and monetary policy stability. The lack of consistency and transparency in exchange rate mechanisms discourages both local and international investment. 7. Key challenges. Persistent dual exchange rate regime. Weak institutional coordination between fiscal and monetary authorities. Over-reliance on crude oil exports for forex earnings. Inadequate support for manufacturing and non-oil exports. 8. Recommendations. Complete forex market unification to eliminate the gap between official and parallel rates. Increase support for domestic production and exports, especially in agriculture and technology. Improve transparency and communication from CBN and fiscal authorities to build investor trust. Establish a framework for gradual Naira liberalization with shock-absorbing mechanisms. Broaden financial inclusion and educate the public on currency management and economic impact. 9. Conclusion. May 2025 marked another volatile month for the Nigerian Naira, reflecting deep-rooted structural weaknesses in the economy and policy execution. While the appreciation in the official market offers a glimmer of hope, the continued depreciation in the parallel market and rising inflation signal the need for bold, consistent, and coordinated reforms. For the Naira to achieve sustainable stability, Nigeria must realign its macroeconomic strategies with long-term economic diversification and monetary discipline. For more news updates, click the subscribe button. Thank you.